Okay, welcome everyone to the Hurley Investments Financial Services Commentary. I'm still going to go on what to do when you. I'm still going to go through what you do when you don't understand what's going on in the stock market today. I'm just going to call it part two. What I usually start with is how do I say this? Okay, well, I usually start with I'm going to pull up my charts. When I don't know what's going on in the stock market, I sat back and I said, you know what? I want to see the charts. As I looked at my charts last week, as I go ahead and I get a pen here, choose a pen color, we were right in here. And through the week, we're back above the 200-day simple moving average for Baidu, in which case, kind of in no man's land still. Technically, it's bullish, but it's technically bullish, and for lack of a better term, I said, you know what? It's moving forward, but this is a time when I don't know, so I'm looking at putting a covered call on. I've got the 200 strike price covered call for Baidu, like out to June. I then just started to check my core stocks, the stocks that I am trading. Alibaba looks exactly the same. As I do my charts technical analysis, I say, hey, Alibaba is bullish, technically speaking, but we're right in between the 200-day and the 50-day simple moving average. It's somewhat in no man's land. When I take a look at this, what do you guys think? Where am I going to place a covered call on Alibaba looking at my chart? Where would you put your, there you go, above 75. In fact, the correct question would be, do I want to get called away or not? If I want to make sure I'm not called away, I can move this, and looking at a chart, if I don't want to get called away, I've got a pretty good resistance level sitting at 80. I've also got the 75-ish that sits right there. So if I was going to short a call and did not want my stock called away, $80 is my strike price. If I'm okay, if I want to be a little more aggressive, I probably on Alibaba have a pretty good resistance level sitting at 75. Couple different things to look at and where I'd place a covered call when my stock in all reality is sitting in uncertainty levels. Let's keep going back. As I look at Facebook, Facebook tested the 50-day simple moving average. I am bullish on Facebook. Unfortunately, I have a March 110 covered call that I took about $1.40 a credit in. It had only like 70 cents the other day. With today's move, one more up day, and I'm going to have to roll that covered call up and out in time. Out of curiosity, what strike price do you think I'd place a covered call on Facebook? What strike price would you place it at? If you were looking at this chart, what strike price do you think you would place it at? Ooh, Steve says 115. That would be my first part as well. 115, I would look to test the highs right there. So most likely I will be rolling for a bit of a profit. Maybe not a whole lot of a profit, but I'd be looking to roll my my 110s up to about a 115 on Facebook. Ford. For crying out loud, Ford can't break that 200-day simple moving average. And when the downside is all the way down here to that 1250, that 1225 level, there's no credit in a short call on Ford. Literally, if you take a quick peek, Ford is sitting right in the middle of no man's land on the RSI. Yes, Ford is technically bullish. But again, there's a lot of uncertainty on Ford. So I'm sitting here looking at Ford saying, I've got to be ready at a break below 13 to add long puts. Visa. I've only got like 38,000 shares of Visa, 78,000 shares of Visa total. And man, look at that ridiculously tight range. Seem to have a floor at 70, maybe at 69. We've got the 50-day sitting at 72.22. We have the stock closing today at 71.91, and at 73.03 we have the 200-day. Right in here, I thought, hey, we're finally breaking out, but that breakout couldn't hold above that. Well, the breakout held above 4 days, above the 50-day and the 200-day simple moving average, and we just got our death cross last week. Can anyone tell me, when you have a death cross, what does that mean? What does that death cross mean? Bearish. There you go. It usually means in the next 6 to 12 months, you're looking at a 7 to 10% drop on average on the stock. Looking at Visa and trying to make my decision, do I call it out for the next 3 months to get through earnings, or do I sit tight? Still undecided. I'll let you guys know what I do next week. Disney, for crying out loud. Disney had its bearish death cross with the best movie of all time. I think they're definitely scary. Yes, they are. And Joseph, I would agree with you. Sometimes it's hard to understand what's going on, but that's where I'm gonna try to put some of that at ease today. Literally, Disney went from 102 down to less than 90. It had its break. It's now working its way back up, building a base. It really can go all the way up to 106. I'm sitting tight in Disney. I've got some long puts that are expiring, but in Disney, as hard as it is, I'm sitting back on Disney, just letting Disney come back. Awfully tough to do, but again, we're somewhat in no man's land on Disney. A big range to fluctuate in. I'd get no credit monthly or even quarterly if I tried to sell something above that 106. I'd have to go up to 110. So I'm just sitting around and waiting. Now, Apple, if I had Apple next, Apple had its breakout. Apple broke the 100, got above the 102. Apple's next run should be up to that 107-ish, but really the 111.75. Unfortunately, Apple has an event coming out next Monday. I think it's next Monday. Nope, maybe next Monday or Tuesday. And it's in no man's land. I could see Apple going all the way up to the 111 range and then selling off. Right now, I have like June short calls on Apple at 110. I am ready to shift some of my money out of Apple into Facebook. So if we do hit that 110, 111, I guess if we get above the 200-day simple moving average, I will end up rolling half of my short calls up and out in strike price, and I will let half of my Apple shares get called away. I call it Apple shares. I probably have around 27,000. So I'm just looking at shifting money out of Apple into Facebook, which might be the next up and coming move or mover like Apple used to be. I always want to start off looking at the indexes first, but I had an interesting comment brought to me, and I'm going to bring that same question to you guys. Why are you guys investing? What's the end game for you? Lance, to make money. I like it. To make money. David, to retire. Okay? Why are you guys trading? What's your end game? What's the reason behind it? Having a consistent and steady return. Abraham, I like it. It's kind of funny because I'll be honest with you. When I started trading, it was all about the money. That was it. I wanted to make a crap load of money. And I learned pretty quickly that trading is a process. And that money ebbs and flows with, how do I say? It just ebbs and flows with, it ebbs and flows with market volatility. And at that point, once I've made some money, the reason why I trade changed. I started trading when I hit a certain dollar figure to not lose money. And literally, I got to the point, in fact, I should put this in here. I don't know why I'm not. Okay, so when I started, it was to make tons of money. Millions of dollars, right? And then when I had 385K-ish, it came to the point I wanted to protect what I had gained, right? And then it came to the point that I quit a 9-to-5 job and I was trading to not have to work again, which turned into a business trading. And the short answer is right now, I'm in the market for the financial freedoms, successful trading offers. What are those freedoms? For me, my time is my time, which means take kids to school, show up at their school for events, coach the kids in sports, get out to visit my dad with cancer, and most recently, stay in the hospital with my brother who has lung cancer and will have a lung removed next week. It's interesting the levels that we all go through in our trading. Now, notice that in my steps, there's a progression in understanding what's most important in being successful in the stock market. When I started, I wanted to make tons of money. How hard do you think it was 2006 and 2007 to make tons of money? And I should tell you it was from about June of 2006. If you looked at a chart, the market was wildly bullish. Boy, we had it so easy, it was ridiculous. And I think once you get to a certain amount of money, it can pay off a home. It can now give you a certain amount of flexibility. And I should change this. When I had what I deemed enough for emergencies, i.e. pay off a house, it literally came to the point where, hey, I need to protect what I gained. And that put me through the end of 2007 to 2009. And then in 2009, my business took off because I made money in 2008. And literally from 2009 to today, I fall into this category. And again, those financial freedoms are not what you would expect. I always thought those financial freedoms would be golfing a ton, getting out to California and surfing. I guess my financial freedoms that I saw were somewhat immature. And at that point, I found out my financial freedom was really my time. The stock market should give you the financial freedom to have the time to do whatever you want to do with it. And that means you understand trading is a process. It's okay to a certain degree if there's a drawdown in your account. And hopefully it'll mean that you get to spend that time and do those things that matter most to you. I hope that's why you're in the education. I hope that's what's going to make the difference when you trade. Because I'll be the first one to admit to you, I've been confused the last week. I get an email notice on the S&P 500, and I think these guys are really good at doing everything but calling a direction. The S&P has support between 201 and 230. Next support at 1950. Resistance 202.40 to 202.50, and then resistance at 204. We've got a bunch of resistance lines stacked up. Bullish factor, short term, we've had some bullish movement on the 5, 10, 20, and 30. Longer term, and Abraham, I think you're the one that pointed out last week, well, Kevin, I look at the 50, the 100, and the 200 day for a general idea of market direction. And I said, you know what? I really don't do that. And the more I looked at the last week, the more people I realized do that. The longer term 50, 100, 200 days simple moving averages are falling and remain in a bearish sequence with the 50 under the 100 and the 100 under the 200. So, Abraham, if I might have been down on using that, you taught us all something last week that it is an opportunity to look at moving averages to make a decision on where the stock is at. Overbought. The index is 4.5 above its 50-day simple moving averages near the top of the long-term band. We think the S&P needs to retest its rising 50-day at some point in the next 1 to 3 months. So as I take a quick look at a chart to verify that, these guys are saying we're going to lose another 85 points to come back down and retest the 1930 level on the S&P 500. I don't understand the need that people think that to retrace. I should have drawn some Fibonacci or some Elliott wave retracements, because right now I don't think that when you go over a certain point you're overbought when you still haven't made it back up to that 2750 to create your V-shaped return, or in this case your W-shaped return, right? As I look at a chart, I would tell you technically bullish with resistance at the 200-day simple moving average. It's having some issue getting over it, at least the last 3 days. Kevin, we have a doji. Well, pretty darn close. And the last time we had a true doji, you're going to find it right here before we had a huge drop down. As I'm looking at what to do with options expiration occurring here, this Friday, right? This Friday, options expiration. I need to make the decision if I'm going to recollar my positions for that drop down. And I'm still yet undecided. I still have not decided what I'm going to do and why. We're still in uncertainty, so I don't have an answer when I look at the chart this way. Abraham, how does it look on a weekly graph? The same? Let's find out. Let's find out. All righty. Wow, the 50-day is all the way down at the 1805, or the 200-day. It's all the way down to 1805. That doesn't make sense. I guess it does. I think it looks much the same. So, as I went through this group that does all this stuff, calendar, obviously they make the point that the Fed is the key data point this week. Nothing much matters. We were down over 100 points. Over 100 points today. And we came back from it. We're flatlined. We are flatlined based on the Fed's decision. Well, Kevin, they're not going to raise rates. And in all honesty, I agree with you. In all honesty, as I was up at 3 o'clock this morning, I agree with you. I thought, you know what? There's no way they're going to raise the rates. They can't. They won't. And then the thought came to me, how often does what we least expect in the stock market all of a sudden happen? I will be the first one to tell you the way that I've got my portfolio set up with a lot of just stocks or some way out of the money long puts and some out of the money short calls set up. If the Fed raised rates tomorrow, it would crush me. It would crush me. I would be so screwed. Right now, that is a risk I'm willing to take. And it's funny because I don't agree with anything on their longer-term view. Our longer-term view is neutral, but we believe the broader picture is increasingly positive. I guess I do agree with that. S&P is a range between 1812 and 2130. I don't call that a range. That's too big of a range to be a range that matters. Long-term momentum is neutral. Well, long-term momentum is actually bearish. They screwed up. The long-term momentum, they just said in their own article, with the 50, 100, and 200 day is bearish. So the long-term momentum is not neutral. It is bearish. With the S&P range bound and moving averages convoluted, we view the economy as accelerating and will surprise at the upside. As I hear them say that, I wonder to myself, how can the economy can surprise at the upside when you have the sell in May go away? How can the economy surprise the upside when you have the S&P 500 for 5 quarters now in a declining earnings picture? The earnings per quarter were higher 6 quarters ago than they were the last 5. Each of the last 5, they've come down in growth from the previous quarter. So as I read their comments here, I found a second error. We believe the S&P will pull back a rising fund before breaking new highs. We're waiting for the opportunity to buy aggressively. Their long-term point of view has 2 errors in it. One error that they told you on the upside. I will tell you that I'm uncertain. And because I'm uncertain, as I discussed last week, probably it's time to go to callers. Is there any cheap way to hedge the portfolio for that risk? Abraham, there is. And Lance asked the same question. So what is the most cost-effective way to hedge your portfolio? The easy point is you go out a year and a half or 2 years with a short call that 100% completely pays for that long put for the next 2 to 3 earnings. And that's what I'm looking at. I'm looking at 2017, 2018 short calls to use to take a huge credit in to protect myself for, as I look at a chart, what I see is a possible downside. Our charts are confusing. Broke above the 50-day moving average and it's bullish. If the Dow Jones is a precursor, we should be okay on the S&P. The NASDAQ, it's bullish, but in no man's land right now. Little confused at what's going on. So, excuse me, guys. What's happening this week and why? The short answer is nothing. Nothing right now as we wait for the FOMC rate decision. And then you might get the bounce up on hopium, right? Hopium, there we go. I made the comment that I think our markets are going to end higher this week. And they're all higher because of no rate hikes for, quote unquote, a considerable amount of time. As I go through, as we began the month, I thought the March would be up about 4%. We're actually up, what, about 6%? What are we month to date? Month to date. Yeah, I think we're closer to 6, maybe 5, 40. Yeah, maybe 4.5%. So I'm looking like my guesstimate. What I'm going to base my growth on is still holding true. which means I'm still holding on to some stock positions, some covered calls, long puts that are holding on. It's been a real tough March. The last 2 weeks, even though we are technically bullish, March has been a real tough month to trade in. As I look at earnings, there's not much that's on tap. Oracle today, FedEx tomorrow, Adobe on Thursday, Tiffany's on Friday. Not much that excites me that says there's a bellwether. As I look at our economic reports, we had a ton of economic reports come out today. Retail sales, pretty disappointing. Retail sales came in worse than expected, and the revisions for last month made our retail sales numbers not look good at all. It's a tough month for retail sales. Inflation went down. Well, obviously with oil going down, it should go down, but it didn't go down nearly as much as I would have expected. I'm telling you this because I see a couple threats of stagflation occurring in the way our stock market is reacting right now. I see more stagflation, or to put that into plain English, I see energies being much higher than expected, and when they fall down, we have a skew in our inflation, and I guess, how is that? A skew in our inflation models. Our inflation models are skewed, and they're skewed to the side that, I don't want to say inflation doesn't matter, but inflation doesn't matter. Whether it's stagflation, inflation, whatever inflation you are worried about right now, it doesn't matter. Inflation's not the concern at this point because we don't have inflation. What the government has tried to do, and in their grand experiment, has not affected inflation. Now, again, you're going to come and tell me, well, Kevin, gas went way up, went way down. I agree. As you pull it out, as Abraham so kindly showed us here, as you pull it out and look at it a little bit longer term, it's pretty mellow across the board. Leading indicators will be interesting on Thursday, Michigan sentiment on Friday, but really on Friday, the big move is going to be options expiration. Internationally, not much happening. In fact, those are all wrong. Don't read any of those. Internationally, we had nothing today. In fact, it's kind of all about Japan. Japan had their Bank of Japan announcement, so we should have on Wednesday, we've got the Japan merchandise trade. On Thursday, we have the EMU, the European Monetary Union, has their inflation numbers that come across. And we also have Japan's Bank of Japan minutes, why they went negative, what they see. And that's it. We're empty. Nothing much to speak of or to worry about. I want to make a quick check to make sure I'm taking a look at that correctly. There is my March Madness bracket. I'm looking at Kansas to take it all. Come on, Kansas. Abraham, I'll hit that question in a minute, and Lance, I'm going to hit your question in a minute as well. Abraham, inflation is higher than official numbers. That is the risk for interests. At some point in time, Fed will recognize that and will be the big moment. Intro. How would I say it? I guess I disagree. I don't see it the same way on inflation. I think inflation takes care of itself. When you let inflation run. So, um, trying to get my market data here on the Wall Street Journal. Give me a quick second. While we're waiting for that, Lance, you asked the question, isn't that an unsafe option strategy to have stock by itself? And the short answer is, Lance, no. It depends on what you have. Well, let me see if I can rephrase what I'm going to say here. You asked if it was unsafe. And my question I would come back to you, Lance, is to say, why would you go put long puts and short calls, two bearish positions on bullish stocks right now? On bullish indexes right now. And if you tell me, well, shouldn't you be collared all the time? Lance, I'm going to come back and I'm going to tell you, hell no, you shouldn't. It makes no sense to not understand the trend is your friend. If the trend is bearish, you make sure you have your protection in place. If your trend is bullish, I am never going to go put a bearish position on a bullish stock. That doesn't make any sense. And Lance, not to beat up on you, but I know you're going to tell me next, well, what if you have a black swan event? Lance, I don't trade black swan events. I'm not setting up a portfolio for something that happens less than a third or a quarter% of the time. I want to trade for what's happening the other 99.7% of the time. That's where I'm focusing my trading because it's going to have higher probabilities. How am I looking to trade? I still have everything from last week. Not much has changed. In fact, nothing's changed at all. I'm sitting here literally just waiting for stuff to expire. I got some really interesting articles here that as I looked at and I was looking at them, I said, you know what? These are ones I wanted to share with you guys. I hope you enjoy them, and let me open it up to you guys. What questions do you have that I can answer for you? What questions do you guys have that I can answer for you right now? Let me go to Lance one more time. Lance, it's not that it's it's not that it's stupid, Lance. A lot of people rush through the educations quickly. And Lance, I can only say that because I've known you from a previous education. The key to getting an education is not to get through it and think that when you've taken all the classes, you're now instantly a genius, because that doesn't work that way. Real life doesn't work that way. What it means is that you're taking the education to learn the rules that are going to best fit your personality. What can you do that's going to fit your personality to give you the ability to be as profitable as you can? The adjustments aren't always set in stone. The adjustments are based on the movements and crossovers of the stocks. We're playing the probability that 83% of the time when you have your technical crossovers, RSI, MACD, and the EMAs, that you get a follow through with the trend for the next 4 to 6 weeks. That doesn't always happen. So, what I am showing you is my risk tolerance and where I have tens of millions of dollars invested. I'm not here to show you how to copy me. I'm not here to show you what you should be doing. I am literally registered, licensed, bonded, and insured so that I can talk real trades with you guys, so I can show you real trades, so I don't get the education, the Safe Option Strategies education, in trouble. That is what I'm doing. You don't have to agree with me. It's okay if you don't agree with me. I can live with that. That's fine. But I would obviously recommend, under no circumstances am I looking to place bearish positions on bullish stocks. That just, I don't get it. I wouldn't do it. It doesn't make a whole lot of sense. Abraham, how to get lost and still make a penny. Abraham, it's funny that you said it that way, and thank you for that comment. 2 weeks ago, when I first started this little series, hey, I'm not sure what's going on, a couple people said it both last week and the week before. Well, if you don't know what's going on, how are we? And that's your first key. Guys, no one knows what's going on. There are no market experts in today's market. All the market experts that have any type of expertise in this type of trading, they are back in the Great Depression. And with all due respect, those people have long since gone and passed. It's okay not to be an expert. If you had to wait till you're an expert to be in the stock market, no one would be in. And the fact that when you're a little bit lost, what we go back to, or what I talked about last week, go to protection. Go to protection if you're lost. Now, Lance, I know you're going to come back and tell me, well, you just said don't put long puts and short calls on. What I said is I don't put bullish stocks. I don't place bearish positions on bullish stocks. Will I protect a stock for an event? FOMC rate meeting? Yes. Will I protect a stock for a sell in May, go away that happens in April? Sure. Will I protect stocks when I'm uncertain? Of course I will. I just haven't done it yet. So what I'm trying to share with you guys, this is the real uncertainty of trading. I am sharing with you guys the fact that, you know what? I'm not a market expert, Abraham. I don't know. In fact, Abraham, as lost as you guys feel in the stock market some days, please don't think Jeffrey and I don't feel the same way. Please don't think we get together and butt heads a little bit and say, you dummy, why are you doing that? Well, you dummy, why are you doing that? The stock market is not easy. And there are different things you can do. And will it always make money? No, there's nothing that makes money 100% of the time. But I enjoy the safe option strategies because it's given me the financial freedoms to place my time where it matters most, at least to myself. Abraham, have you checked from your trading history, on average, how much percent have you already spent in protection annually? No. In fact, Abraham, I've never checked how much I've spent annually on protection. What I judge my portfolio on is growth against the S&P 500 because that's what everyone else does. So at no time have I ever gone through or calculated how much money I've spent on protection. I just realize if we protect our home, our house, our health, our life, sometimes we put insurance on our wife. Why wouldn't we protect our revenue stream when we hit that retirement? It just, I found it very interesting that we spend so much money on things that are going to get us to retirement, but we're not willing to spend money on probably one of the most important things, which is our income stream at that time. The reason I ask that is to have a general figure of cost insurance in order to compare styles. Um, yeah, I don't even know where to tell you I'd start, because in all honesty, Abraham, in 2008, I learned how important it was to go way out in time with the short call. And in 2008, I learned how important it was as stocks were falling through levels of support to go ahead and add second and third and occasionally a fourth contract on stocks as they were plummeting, like in 2008. I'm probably reactive to the market versus proactive. I'm going to react to what's happening versus trying to outguess the market. And I guess that's my style, to make sure that as I take a look, I mean, right now it's more important for me to not lose money versus making money. The reason I feel that way is because the uncertainty of today's market. Well, Kevin, if you feel that way, don't you think you should add some protection? Yes, I'm pretty close to feeling like I should add some protection. Abraham, am I answering your questions? Anyone else? Anyone else have any questions you'd like to ask me for tonight? Abraham, I don't know if I'd have it, because some of the times I look at it and I pay for my insurance with that short call. So I'm not sure if I have an accurate way to tell you what I'm spending. I will tell you I don't run stocks through earnings without protection. So I do spend a pretty penny. Sometimes they're just protective puts. Sometimes they're out of my protective puts. Sometimes it's a collar. Sometimes it's an exploding collar. Sometimes I'm making sure that collar is much farther out in time, or that short call is much farther out in time, to make sure that that I'm in a zero risk trade for a period of time. And I think that usually comes to be in an area, Abraham, where the market dictates that to me. Perfect. Okay, hey guys, I appreciate you being here today. I do hope this was helpful. Um, I was trying to show you, in all honesty, that that I don't have every answer. And because I don't have every answer, I'm trying to share with you guys what I do, so that it gives you some perspective on how I'm looking to trade and why. Guys, I appreciate your time. Thank you for being here today. My pleasure to spend this time with you. Have a great week. Next week, I am pretty sure I am canceling my session, which means if you go to my website, I will just record what I want to go over and have it there for you. You can go to hurleyinvestments.com, go to the blog site, you'll find me there, or you will also be able to reach it on my Hurley Investment. I'll make sure it's there in one way or the other. Lance and Abraham, I appreciate your questions. You two especially. I appreciate the fact that you're willing to go ahead and ask those tough questions. I think that's only going to make both of you that much better in the program and that much better as a client. Guys, take care. Have a good week, and I'll talk to you soon. Bye-bye.